Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate jargon to find the hidden stories in financial filings and get this company sold $600 million worth of notes, and we are going to break down what that means for them and for investors. Before we dive in, make sure you're subscribed to Corporate Decoder for more like this, and we have a thriving Discord community in the description below to join the conversation. Have a thriving Discord community in the description below to join the conversation. Now let's talk about Lithia Motors. They put out some news that's pretty important for anyone keeping an eye on the auto industry. Specifically, they announced they priced a private offering, meaning they sold bonds to investors for a massive $600 million. This is a big move, and it tells us a lot about their plans. So what does this $600 million mean? Well, it means Lithia Motors is essentially borrowing a lot of money from investors. The company is offering these notes which are like IOUs due in 2030, and they're going to pay investors a 5.5% interest rate each year. This is a pretty significant amount of money, and it shows that the company feels confident enough in its business to take on this debt. When companies borrow money like this, it's often to fund growth, expand their operations, or perhaps refinance existing debt that might have had higher interest rates. Think of it like taking out a bigger mortgage to renovate your house or buy a bigger one. This 5.5% interest rate is the cost of borrowing that money, and it's important to compare this to other borrowing costs in the market and how profitable Lithia Motors is. Now, it's crucial to understand what's registered with the exchanges. Lithia Motors common stock is traded on the New York Stock Exchange. This means a lot of people can buy and sell their shares, and it also means they have to follow strict rules about telling the public what's going on with their business. This filing, for example, is a way for them to communicate important news officially, and as we see here, their common stock trades under the ticker symbol LD. This filing is a simple announcement of a financial event, the pricing of the notes, but it's attached to an exhibit which is a press release. This press release is where the real details of the offering are usually found. Investors and analysts will be poring over this to understand the terms of the notes and why Lithia is raising so much capital. Based on this information, Lithia Motors is positioning itself for the future. They are securing capital which could be used for anything from acquiring more dealerships to investing in new technologies, or even just strengthening their balance sheet for tougher economic times. The fact that they're issuing debt rather than selling more stock means they believe the value of their existing shares is high enough that they don't want to dilute it by issuing more stock, and they are comfortable taking on this debt. So what's my take on Lithia Motors raising $600 million? Well, it signals a company with ambition, but also one that is relying on debt to fuel its growth. The 5.5% interest rate is a key figure. If their business generates returns higher than that, then this debt is likely a smart move. However, if the automotive faces a downturn, or if Lithia's profitability dips, this debt could become a burden. The company is heavily invested in the dealership model, which can be very profitable, but also sensitive to economic cycles and consumer spending. The key risk here is whether they can maintain their profitability to service this significant debt and continue growing. The opportunity lies in their ability to strategically deploy this capital to gain market share or improve operational efficiency. Ultimately, Lithia Motors appears to be a growing company using financial tools to accelerate that growth, but like any leveraged company, investors will be watching their performance very closely as a downturn, or if Lithia's profitability dips, this debt could become a burden. The company is heavily invested in the dealership model, which can be very unbalanced, very closely to be a growing company using. Alright, that's our breakdown of Lithia Motors' announcement. What's your take on this debt offering and what it means for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.